legal framework of a tax audit. And for the legal framework of a tax audit, okay, you have to know the Revenue Administration Act, especially things around returns, okay, assessments, and then objections. And then you remember the refunds. Specifically, this is where your examiner really wants you to focus on. Okay, returns, assessment, objections, refunds, and then maybe the penalties. But the penalties now, they sort of limited. So I'll just teach you how to compute two types of penalties, right? Interest. So I'll teach you interest for underestimation of tax payable, and I'm also going to teach you for interest for tax unpaid taxes. Then finally, maybe penalties for failing to file returns and false and misleading statement. Then I know that my people are well prepared. Are we okay? So why do you think we need a legal framework? This is a 10 marker question. They'll ask you, why do you think we need a legal framework for a tax audit? Why do we need legal framework for tax audit? Now, if tax audit doesn't have a legal framework and a GRA officer comes into your office, because he's intruding your affairs. Imagine the chaos that would have happened if there was no law governing tax audit. And one day, GRA officer being pen once and no Chinese be company, the wire for. Do you understand? Because there's no legal framework. Do you understand? So there's a need for a legal framework to actually provide adequate powers to obtain information and even have what an appropriate regime for sanctions. If there's a legal framework, then we can base on that framework. If you are not complying, then we can sanction you, or then we can make you pay some what penalties or even imprison you, right? You know, a normal tax audit intrudes the affairs of the taxpayer. True or false? Maybe you may go when he's working or his people are working and they have to stop the work to attend to you. True or false? Assuming there was no legal framework, do you think the taxpayer can do that for you? I'm asking the class.
True. It's true.
They will not do it. So there's the need for a legal framework to be able to do these things. I get it. And a legal framework is also required to provide integrity in the way the administrator carries out the audit. Because if there is a particular framework on how things should be done, it will make it easier. And also to ensure that the taxpayers' rights are protected, there's the need for a legal framework. Are we okay? John, your hand is up again.
Oh, sorry. Bro, sorry. Sorry, Prof.
But I hope it's clear.
Yeah, it's clear.
So, why do we need a tax audit legal framework? I'm asking the class. Why should there be a tax audit legal framework? Why do we need a tax audit legal framework? Oh, I just explained this and you are quiet. 10 marks. Oh.
To empower GRA to undertake the audit.
Okay, that's 1. 2.
So it also ensure taxpayers' rights are protected.
To ensure taxpayers' rights are protected. 3. Emmanuel, you wanted to say something?
Yeah, to ensure consistency.
To ensure consistency. Okay.
In the conduct of audit.
The conduct of audit. Yes, 4. It's 5 marks, 2 marks each. So I need a 5th one. Audit intrude the affairs of taxpayer, right? So, because it intrudes the affairs of the taxpayer, a legal framework will lay way. Are you getting it? For the taxpayer to accept that intrusion. Makes sense. I hope it makes sense.
Yeah.
Hope it makes sense. I hope it makes sense. Good. So before we proceed, we have to understand. Somebody's background is noisy. Please, who is that? Hello.
Red one on the bro.
Isaac Boachi.
Hello, Prof.
Yes, please.
Please, the reasons for the legal framework. Can we also include Section 7 of the Revenue Administration Act?
Yes.
All right.
Confidentiality or official secrecy.
Right.
Yes. No be so. No be so.
It be so.
That is what covers the taxpayers' rights are protected. No.
Are you putting 20 salt?
No.
All right. Can we proceed? So let's understand the taxpayers charter. Now, what is the taxpayers charter? A question has come before that asks students about the taxpayers charter. Now, the taxpayers charter is a document that defines taxpayers' rights and obligations under the tax law. What is a taxpayers charter? It is what? A document that defines taxpayers' rights and obligations under the what? The tax laws. What is a taxpayers charter? It is what? I want you to repeat it again. It is what?
It is a document that
Document that defines
That
taxpayers' rights
defines
and
obligation
obligations
under the
under
tax
the
law.
tax law.
Thank you. And what you have said right now is 3 marks. Can you imagine? Can you imagine? All right. So, what is the role of the taxpayers charter? That is the next one for 7 marks. 1. The taxpayers charter is for building trust between the taxpayer and the income tax department or the GRE, right? The taxpayers charter defines the taxpayer's rights and obligations under the tax law. It also specifies the GRE's commitment to providing services to the taxpayers. And it is a step in bringing transparency in the tax services from the department and tax compliance by the taxpayer. So that is the role that the taxpayers charter plays. Are we okay? In the audit. I hope that makes sense. So if they ask you the taxpayer charter and its rules, I hope you can say something. Can you say something? Can you say
Yeah.
something? So what
Yes,
is the
please.
taxpayer's right? So the taxpayer has rights and he has what? Obligations. So what are the taxpayer's rights? The taxpayer's right includes the right to information, the right to have enquiries addressed promptly and appropriately, the right to courtesy and consideration, the right to what? Fairness and transparency, the right to independent appeal and review, the right to claim refund of ascertained what? Taxes overpaid, the right to claim all personal reliefs upon satisfaction of all laid down conditions, and even the right to privacy and what? Confidentiality. Hey, please, whose background is that? Whose background is that? Okay, the person has muted. But do you get the whole idea? So these are some of the taxpayers' rights they can ask you, right? You need a right to information, right to have inquiries addressed promptly and appropriately, right to courtesy and consideration, right to fairness and transparency, independent appeal, right to representation, right? And even right to claim refund or claim all release, right to privacy and confidentiality. Are we okay? Then your obligations is what? Filing returns, or even you can start with what? Registering with the authority, filing your returns on due date, paying your taxes on due date, keeping and maintaining proper records of your business, right? Making business records available for examination and auditing, and even informing GRA of any changes in your business. Now, anytime there's something goes wrong with the taxpayer's obligations, it creates a taxpayer risk. What did I say? I said anytime something goes wrong with the taxpayer's obligations, it causes what? A taxpayer what? Risk. And that's what we call audit risk. So how many types of audit risk do we have in a tax audit? Mention them.
Detection.
Inherit risk.
Control risk.
You are all wrong.
Inherit risk.
Welcome where Diego.
Registration risk.
Inti anka we nyina mwakwa akwa Diego. No.
Taxpayers risk. Hey, Prof, I thought it's inherit, control, and then
You are wrong. Those are not audit
Registration
risk.
risk.
Those are not audit risk. They are elements of audit risk. It means that every audit risk that may happen may be caused by those things. The actual audit risk are registration risk, filing risk, declaration risk,
filing risk,
payment risk,
declaration risk, and payment risk.
payment risk.
Yeah.
And those things may be caused by
Okay.
the inherent risk, the control risk, or the detection risk. But from the perspective of the authority, they see risk
Okay.
from 2 categories. Either risk of inaccurate records or risk of misrepresentation of the tax law or misapplication of the tax law. I say baby I do. So
So can you come again on
I
the
will teach you all. Don't worry. We are
okay?
going. So there's nothing I'll mention that I'll not teach you in detail. So let's cool down. Are we okay? But as of now, are we okay with the taxpayers charter? Are we okay with the taxpayers charter?
Yes.
Yes, please.
So let me ask you, what is the taxpayers charter? What are the rules of the taxpayers charter? Outline three rights and three obligations of taxpayers for 20 marks.
Oh, that will take like 50 minutes to write. Oh.
No, just mention them. This I didn't say right.
Prof,
Yes, please.
I think the taxpayer charter is a document
Okay.
that defines the taxpayer rights and obligations under the tax law.
Okay. Okay. And what are the rules of the charter?
Prof, one is
Building trust.
It builds trust between the taxpayer and
the taxpayer charter defines the taxpayer's rights and obligations under the law.
It also stipulates the commitment from tax authorities.
It enhances transparency.
It enhances transparency. You have all done well. Can we also say it helps to avoid disputes? Somebody said that. I believe so, right? It can even help define how the tax auditor should even do his work because he knows exactly what the taxpayer should be doing. Do you understand? So, what are the elements of the legal framework? This always comes for 10 marks. Just listing them for 10 marks. Can you imagine? But you explained them briefly. So, we are going to go into them. So, someone should read for me. What are the elements of the legal framework? The framework now, yeah, what elements are in there? Yes.
Taxpayers' record keeping obligation, giving tax officials access to taxpayers' books and records, giving tax officials access to third-party information sources, obtaining information from other countries' revenue bodies, power of GRA to amend tax returns, and sanctions for non-compliance.
Please read it again.
Taxpayers' record keeping obligation,
Okay.
giving tax officials access to taxpayers' books and records,
Okay.
giving tax officials access to third-party information sources, obtaining information from other countries' revenue bodies,
Yes.
part of GRA to amend tax returns, and sanctions for non-compliance.
Yes. So we are saying that, you see, the key elements of the legal framework is that one, taxpayers must keep proper records. Okay. So taxpayers are required to maintain what? Accurate and complete records of their financial transactions. And these records are crucial for GRA to verify the accuracy of their tax returns and to assess compliance with the tax laws. So proper record keeping will help in facilitating smooth and effective what? Audits. Two, access to your books and records, right? One of the duties of the rights of a tax auditor is to have free access to your books and records, and even to have free what room to inquire or what interview your staff or take what or take any document. Are we okay? From your way or extract any information from your books, from your computers. Are you getting it? It's part of their rights and it's part of the legal framework. I'm coming.
Hello.
Said it's coming.
Okay.
Oh, okay.
So, as we said, right? So, access to the taxpayers' books and records, right? The legal framework mandates that tax officials have the authority to access what taxpayers' books and records. This access allows auditors to review financial statements and other relevant documents necessary to what assess tax liabilities and even compliance. Right. Also, we have access to third-party information sources. So, in addition to accessing taxpayers' records, tax officials are also empowered to what, obtain information from third-party sources, and this includes information from banks, financial institutions, and other entities, solicitors, are you getting it? Even professional bodies that hold relevant data about what the taxpayers' financial activities. Are we okay? They can also obtain information from foreign revenue bodies. And this is where we come to what exchange of information. You remember. So we have exchange of information on request. Are you getting it? Automatic exchange of information, industry wide exchange of information. We have even spontaneous exchange of information, um, tax audits abroad, and even simultaneous tax audits. All these things are ways we obtain information from foreign revenue bodies. So, to address cross border tax issues and ensure comprehensive audits, the GRA may need to obtain information from the revenue bodies in other countries. So, this international cooperation helps in tracking and assessing the financial activities of taxpayers who may have international business dealings or assets. Then we also have the powers to amend returns. Okay, so this is where we have correctness of return in our Revenue Administration Act. So the legal framework also grants GRE the authority to amend tax returns if discrepancies or errors are actually what identified. Now, this power ensures that the tax assessment reflects accurate and complete information, maintaining the integrity of the tax system. Then we finally have sanctions for what? Non-compliance. So this is where we can actually impose penalties. I get to know interest on people who fail. I get to meet their tax obligations. So the framework outlines the types of penalties and enforcement actions that can be taken against taxpayers who do not comply with the tax laws, right? Ensuring that there are consequences for failing to adhere to the legal requirements. Now, if this thing comes for 10 marks, you have to say something small. And it always comes for 10 marks. They just tell you to explain the key elements of the tax audit legal framework. And that is all. Pamacho, be a question, Anna. Or we can move. I want us to move through this quick, so that we can start going through all the past questions around this area. Then we close the chapter. What do you say? So are
Good
we
idea.
good? All right. So let's look at, now that we've seen the legal framework and what it entails, I get it. Now, which section talks about maintenance of records and how long do you have to maintain records for?
6 years.
Yes.
6 years. And what are the rules regarding maintaining of records? Section 27 of the Revenue Administration Act. You are supposed to hold records until the commissioner tells you to do so, okay, to destroy them when they are under, let's say that there was a record that has hit 6 years, right? But then there's a pending investigation against you. You can't still disregard the record, you can't still destroy them, okay? When you are under a pending investigation, when you have applied for a refund, are you getting it? You cannot destroy any record. So if there's a current tax that has to be paid and there's a record attached to it, you cannot destroy that record. You get it? And if you want to destroy a record before the 6 years, you can apply to the authority. Why is that so? You see, this NGOs, sometimes your donors who give you funds, okay, sometimes you can say that we don't want you to keep records regarding our funds for 2 years. Are you getting it? So you can apply to the commissioner saying that due to the nature of the business you are in, okay, your donors for the NGO require your records to be destroyed after 2 years, and the commissioner may allow you to destroy these records even though they were not kept for 6 years. Somebody said, say,
Sir,
did you continue? Yeah, I'm listening.
yeah. Even after the 6 year, you still need to inform GRE
That's
before
what I'm
destruction.
saying. Yes, that's what I'm saying. Please, are we okay?
Right, just for clarification, are you saying after the 6 years pass, every time you're supposed to inform GRA if you get rid of the records?
Yes, please.
You have
Oh,
to.
okay. Okay.
All right. So we have seen that, right? Now I want to talk about the auditor's liability. We'll come to quality control, right? Which is management and organization of the audit function. That thing is a big topic in your syllabus, but I've hardly seen people talk about it. But we will talk about it in detail. Now, what is auditor's liability? So the auditor's liability is legal claims against the auditor. Remember I told you that the auditor, GRA can also outsign audits, right? They can outsource audits to other audit firms. And then a particular audit question can come and ask you that, what is the benefit of outsourcing a tax audit to an external audit firm? One, they may have the experience, they may have the resources. It leaves GRA the chance to focus on other revenue producing activities, right? But what are the disadvantages? Yes. Who can tell me why it would be better to outsource an audit to an external audit firm by GRA? And two, what are the disadvantages? Yes, I'm waiting to hear from the class. A potential question. At least let's get 5 points each. Or even if it's 4-4, it can still help you. Yes. Benefits of outsourcing and disadvantages of outsourcing an audit to an external audit firm. Yes. I've given you some already. Experience, skills, resources to leave GRA the time to focus on other important things. Yes, others, please, quickly. We have a lot to
Adequate and proper review.
adequate and proper review. Okay. Yes.
Because
It's cost efficient.
Cost efficient.
No, also disadvantage.
Are you sure it's cost efficient? Everything you say is correct too. So you tell me why you think it's cost efficient.
Why is it okay?
It can be cost efficient, but you must explain why. Okay, somebody gave a good point. It can help in the transfer of risk of litigation. And this is the main topic we are even dealing with now. Yes.
Yeah, I think it's also it helps the number of audits, increase the number of audit done for the year, as well as it's also improve revenue collection in
Yes.
case there's a huge liability arising from this external auditors audit.
Yeah. Okay, that is good. Then what about the disadvantages of outsourcing an external audit to outsourcing a tax audit to an external audit firm? Sorry. Disadvantages. Risk of
So, but I think
leakage
it will
of
be
cost.
very expensive.
Yes, cost issues are also there. It can be very expensive. And it can also be cost efficient.
Yeah.
Person is supposed to explain that point. I'm still waiting. How can it be cost efficient? Look, assuming there's a
Yeah,
new type of firm, all right, and GRA has not audited that type of firm before, maybe AI business, but KPMG has audited a lot of AI businesses. GRA going to audit AI businesses will require a lot of resources and cost, but when it outsources it to KPMG, the cost will be a little lower than if it was supposed to now train people on AI, do all that before it goes to audit them. Wouldn't it save GRA cost now? It will. This is what I expected the person to say in terms of cost
What
efficient.
I was about to say.
But you didn't say it. I said the guy who said, this girl, I go rap am sharp, but he never took the step. You are the same. Right. So you get it now. But it can also be very expensive, right? So that is it. Yes, any other point? I hope these things you are writing them down.
It's
Yes, please. I'm listening. Please, I'm listening. Oh.
I'm saying that it exposes the weakness in GRE.
Okay, it exposes the weakness in some of GRA's procedures. Yes. Yes. Harry, you're saying something.
Prof.
Yes, boss.
I was also what I wanted to add, like what the lady said about the cost efficiency. Maybe it keeps GRA wage bill in check.
Of course.
Since we are not employing more, then we have outsourcing part.
Of course. Of course,
Yes,
that's
I think another point of disadvantage is the external auditor's audit may result in no liability. Nothing may come out from the audit.
yes. If nothing may come out of the audit, that is very true. What about risk of exposure of
To the staff.
confidential information?
Okay.
Even external auditors are even more confidential. Oh. But yes, some information is the GRA doesn't want anyone to know. But if I have to outsource now, people out there are supposed to know. But I hope you get the whole idea, though. I hope when this thing comes, you can write something.
Yes, sir.
That's all I want from you.
Yeah,
Yeah.
and I think some of the taxpayers may not be comfortable being audited by the external auditors.
Yes, that is true. They may not be comfortable being audited, but they will see it like, hey, Charlie. When they go for you, we should quote, but GRA t-shirt, Lacoste, na nom sheba, na mi pe quote, I say, yes, CIA for they will be uncomfortable. Ghanaians always think
Can I
auditors
also
are
say,
police. Yes, please.
like, a lack of exposure to GRA staff to learn? Once you are source, your staff do not get the chance to learn.
Yes, of course. Yes. They do not get a chance to learn. Very good point. I mean, I'll take that. Good, good. You see, these are the things we are looking for from you. So it's not anything out of the ordinary. Tax audit requires a lot of application and common sense. You see it yourself. And that's how you score. You get it. Mixing all these things up. Huh. So now, when we talk about auditor liability, this is where legal claims are made against the auditor, where they sue the auditor. I get it. And you see, this thing, we can even sue a GRA officer, even though he's under GRA. Do you know that? Do you know we can even sue a GRA officer?
Yes, sir.
Your head
We
of
are not
audit can
above
sue
the
you.
law.
Of course. Now, you have to understand the different types of what auditor liability that there are. Okay, so there are three types of audit liability. What did I say? There are three types of what? Audit liability. So we have what we call the civil liability. So this is where the taxpayer has sued you, the auditor. Do you get it? So maybe the liability you raised, there was an error, okay, and then the taxpayer sued you. So this is auditor versus the client or the taxpayer. We have criminal liability, which is the auditor versus the state. So let's say that you are working as what? The auditor, right? And you are the same person preparing the account, and this taxpayer was involved in some money laundering or drug trafficking. Do you think the state will not deal with you as a revenue officer? Won't the state deal with you? It is you versus Attorney General. Meboa. The person is involved in criminal proceed and you are helping him. If we find out, won't we prosecute you?
Oh,
We will. That's what we call criminal liability, where the auditor, the state is against the auditor. Then we have negligence. Negligence is where some third party has relied on your information to take a decision. Okay, and because of that, he has suffered some losses, and he said he is suing you. You are saying this person's financial statements are clean. Then I went to rely on the financial statement. You said Men's Gold, their financials are clean. Then I went to invest in Men's Gold, and then Men's Gold what? Closed down. Now I'm suing you. Will the court allow it? It depends on three criteria, right? You need to prove three things. I said you need to prove what?
three things.
Three things. One, did you owe the person a duty of care? Two, was that duty breached? Three, did the person suffer losses? Okay, so when you're suing someone for negligence, we must check whether you owe the person a duty of care, that duty was breached, and the person suffered losses. Now, if the auditor knew the person was going to use the information and he went forward to do what he's supposed to do, then the person can prove these things and sue the auditor. But if the auditor was just preparing it for the taxpayer and not the third party, the person cannot sue the auditor for these things. I hope that makes sense. I hope that makes sense.
Please come again.
I said, look at this. So somebody has come to GRA that he wants to go to the bank to go for a loan, but the bank said that they need a tax audit, right, on the taxpayer's affairs before they can give him the loan. just to confer his tax compliance. Are you getting it? You see, this is not a normal a normal tax audit. It's just like some sort of a tax health check, just to tell the authorities that GRA itself has agreed that the taxpayer is right to give the loan. Okay, fast forward. You knew the bank, you the tax officer, you knew the bank was going to rely on this report you are going to give the person the loan, and you are saying the person is in good standing. They give this guy the loan, and 3 months in, the business collapses, and then they sue the tax auditor who was involved. Did the tax auditor know that the bank was going to use the report? Yes, he did. So if the bank sues him, is it possible? Yes. But if the tax auditor didn't know it was for the bank, he only did it for the taxpayer, then the bank cannot sue the auditor. Does it make sense? Does it make sense?
Yes, sir, but isn't it implied that once you're giving the
No,
report, anybody can use it?
no. It doesn't work like that. You always address the report to specific people. It is
Sir,
there. Yes, please.
there's no way the tax auditor would not know the use of the document.
No, I am saying that in the document itself, that's why we have clauses. Some document, the clause will not be, it will tell you that they are going to use it for a bank way. But that one doesn't mean that it was prepared for the bank. Do you understand? But there will be another document that is directly saying that, do you agree that this information can be used in the bank in case there's a liability? You are going to face it. Then you take yes, or you sign against it. That's what I'm saying. If there was nothing of that sort and the bank used it, it's not your problem. But if the bank can prove you owe them a duty of care, are you getting it? You breach that duty and they suffered losses, then they can sue you on the case of negligence. Does it make sense now? Does it make sense?
Yeah.
On negligence, you need to prove three things. That you were owed a duty of care, the duty was breached, and as a result, the person faced what? Losses. So how do we reduce the auditor's exposure to liability? When you
Please,
properly perform your audit work,
may I ask a question?
Yes, please, you can.
Yeah, so this outsourcing of audit work to external parties, in case there is a breach or there's a negligence, and taxpayer want to sue, would the GRA be held responsible when the audit was done by external auditors? Or
It depends on the terms of reference and the nature of scope and depth of the audit. Do you get it? So there are some liabilities that
I know they are paid commission.
Yes, I understand. But I'm saying that there are some liabilities that GRA takes it, and there are some liabilities that GRA can never take it. In terms of issues that come with experience, you, the auditor, will have to bear it yourself. Let's say there's something that is basic that should have been done, right? But when it comes to issues around tax liabilities and areas around detection, GRA will have to bear that risk. So they share the risk. It depends on the nature and scope. That's what I was saying. So let's say it's an area GRA is completely not aware, but they've given you full authority over the whole audit, then GRA will bear the full liability. Emmanuel, are you okay?
Yes, it's fine.
All right. So we are saying that how do you reduce auditors' exposure to liability? When you properly perform your audit work, sometimes you can use disclaimers, right? You can disclose or make a disclaimer that if this happens, you are not liable. You can do proper quality control. You can follow appropriate audit standards. You can ensure up-to-date audit methods. You can use competent staff and even do effective communication, right? Effective communication throughout the audit will ensure that you are less exposed to audit liabilities. Are we okay?
Prof,
Yes.
can you also take a form of insurance?
Yes, professional indemnity insurance is part of it. That was the last thing I wanted to mention. You call it professional indemnity insurance, and it is required, especially for firms. If you expose your outsources to a firm, yes, they already have professional indemnity insurance, and that's not taken by individual auditors. It's taken by the firm. So if you are working as an auditor, you are under that indemnity insurance coverage. Is that clear? Is everybody okay with audit liabilities? So let me ask you this question. If there's an auditor's liability, should we pry for out of court settlement or in court settlement? Which one should we go with? Out of court or in court settlement?
Out of court.
Out of
Out
court.
of court. Why? Why?
Because out of court protect the
It's
image
less
of the
expensive.
company.
Yes, it protects the image. And also it even what comes with a cost, right? Remember
Less
going to court
expensive,
comes with
yeah.
cost.
Less
Yes,
expensive.
it's less expensive. And even protects your reputation and image. It also what
Yeah.
brings settlement lower than expected. Do you get it? Okay. So that is it. Now we move.
And depending on the issue too, sometimes you have to go to court so that there will be that recorded, because there's tax
course.
people sometimes you settle the thing amicably, but the information you hear someday might not be palatable.
Settlement but not settlement.
Yes.
All right. So there's one thing that they can ask you, even though it is not directly like in a tax audit, but it's part of a tax audit indirectly. Okay. So depending on the firm, you see, for big taxpayers, they usually have audit committees, right? And when you, the tax auditor, you go in there, you have to liaise with the audit committee. You know that. True or false? So your examiner also requires you to know the role of the audit committee. So who are the audit committee? Immediately you hear audit committee, remember Sister Clarissa. I said immediately you hear audit committee, remember what? Sister what? Sister what? Sister Clarissa. What did I say? Remember Sister what?
Clarissa.
Sister Clarissa.
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 So who are the audit committee? Now, it's a committee of non-executive directors in the taxpayer's business with a term of reference laid down with clearly, I get it, its authority and duties. So this committee is mostly set up to liaise audit, both internal or external, tax audit or any kind of audit. Now, the committee should be made up of at least 3 non-executive directors. I get a one with recent financial experience. So they are trained NEDs, but at least one of them should be in finance, right? Or should have worked in finance, because finance goes with audit. Now, they can ask you the role of this audit committee. So you must remember Clarissa. So Clarissa is what you use to talk about the role of the audit committee. So what is Clarissa? So Clarissa starts with T. C. Now, they create a climate of discipline in the organization. If you know that there's somebody overseeing your accounting function, you hardly mess up. And they learn credibility in financial reporting. Now, most people, when they are going to invest in any firm, they first find out if they have an audit committee set up in the board. If they know that you have an audit committee set up in the board, it gives them some sort of what assurance that you are doing the right thing. Also, they assist the CFO to provide forums on the board of directors, because most of them are in audit or what finance. They review your financial reporting needs and internal controls. That's mostly what they do. Whatever the internal auditor will do, the external auditor will do. They check all that, and whatever report that management will perform or report, they check all that. And then they are independent of the firm, because they are all non-executives. They strengthen the position of the tax auditors, even external audit. They strengthen the position of internal audit, and they also assist to resolve disputes between auditors and management. So this is what Clarissa stands for. Is that okay? Is that okay?
Yes, sir.
So remember Clarissa when you hear audit committee. So can we move?
Yes,
Can we
please.
move? Good. So now we are coming to money laundry. Now, what is the meaning of laundry? Laundry, is it not washing dirty clothes clean? Laundry, is it not washing dirty clothes clean?
Yeah, making something.
Exactly,
Your line is
exactly.
not
So
clear.
washing dirty clothes what? Clean. So if we say money laundry, it means washing dirty money clean, right? So this is where concealed funds from criminal proceeds are made to look legitimate, as if they came from a clean source. So it is the process by which criminals attempt to conceal the true origin and ownership of proceeds from criminal activity. Now, if you want to catch a thief, you must first be a thief. So to catch money launderers, we spend time really laundering money, like small transactions. You launder money as an assignment and give to your supervisor. Then they will mark it for you. So you must always look for, when a case comes, okay, you must look for triggers in there that tells you what there's money laundering. And money laundering is actually an audit risk, okay? Anyway, now let me explain something. You see, the auditor, one of the key things about the auditor or the tax auditor is that when you spot money laundering as part of your audit work, you must avoid tipping off. What did I say? You must avoid what? I said you must avoid what?
Tipping off.
When I say
Tipping
tipping
off.
off, who can explain what tipping off means? Who can explain what tipping off means?
So it means giving information out. So maybe when you identify the money laundering, you give the taxpayer information that I've seen what you are doing, so be careful or something like that.
You can't do that. It's an offense. If you do that, you may even be arrested. So even GRA, we have a money laundering reporting unit. You know that. So everywhere you go, you have, for audit firms, you have a money laundering reporting officer who you have to explain to. But you must always avoid tipping off, right? So how do you spot money laundering in a case? You can see transactions that have been what? Routed through several jurisdictions. Like the money has gone through several legs. Somebody received money in this account, he went through this account, he went to that account, they put it in some betting firm, then finally it was washed clean. So let me teach you money laundering in a summary. Look at this guy has been involved in romance scam, right? Romance scam in the US. So what he's going to, if this is how we transfer funds, right? The US has a limitation of $10,000
They
too.
are convicted here too, please. So let's
So,
speak mind. Someone mentioned about
please, no names, I beg you. I'm just giving an example. Now, the romance scam is just a sham. This is not what they're actually doing, right? So through the romance scam, they ask you for your NI or let's say your SNIT number, okay? Now, so far as we have the idea, we intercept your IP address. Okay, it's very easy to do. We use Nmaps. So once we intercept your IP address, you will go and check your number, right? Just so you will not think that somebody is hacking you. So we do what we call phishing. So phishing is maybe that website, like SNIT's website, right, where you are going to enter your social security number. We will do the same thing, the same page, make it look the same. It's just programming, right? And now with AI, this thing is on the rampart because now AI can design the same site and just change the IP to look the same. So once you click maybe snit.com, it will be snit too, but if you don't take care, you'll not see it very well. So this S like this may have some break in there, you'll not see, but it looks exactly the same. Okay, and you go there, we create the same site. And what this site does is that it collects your data only. Once it collects the data, it saves it on my PC, then redirects you to the actual SNIT website again to key in your details. So you'll be like, but I thought I logged in. Then you log in again. So it's like we just create a face login. You log in, we collect your data, then you can actually log in into your real account. So once we have your NIN number, it connects to everything. So that is how they do it. So they claim I love you, then they transfer everything here. Now what they do is that they transfer this in cryptocurrency and NFTs, okay, and USDT. So they transfer it all across board. I get and create mini accounts and reinvest them. Do you get it? So it goes through 3 stages. So in old time cocaine money, 3 stages. So we have PLI, placement, where it is placed into the account or the financial system. The first time it enters into a bank is what we call placement. Then now you transfer from bank to bank by creating an audit trail, right? Then finally it goes to what? A preferential tax regime, an area where we cannot. This is how the big men transfer money. We transfer it to an area where nobody knows. There are some countries that just protect taxpayers. Like Habibi, come to Dubai. Dubai, if you like, you are who? We will not disclose the account to you. So it depends on the kind of account, though. So if you transfer this money, okay, to Dubai, Cayman Island, or even Mauritius. Now, Mauritius is sort of coming down small. It's a preferential tax regime. So they are going to create this transaction trail, right? From bank to bank, maybe send to Cayman Islands, send to Dubai, send to Mauritius, and then bring it back to Ghana, right? And in Ghana, you see they've brought it to Ghana. They've done layering. They create transaction layers. Then finally, they integrate it into the system. So look at what they do. They do what we call betting arbitrage. Please don't try this, those who bet. Betting arbitrage is one way that you decrease the chances of you losing. All right. So they know that these two teams are playing, right? Team A and Team B are playing. Are you getting it? Now, what happens is that no matter what, one of these teams must win. True or false? Will definitely win. So this money that he has brought, which is 100 million, he's going to split and say that, okay, let me maybe put what, 50, or let me put 30 million here and another 30 million here. Are you getting it? And then for draw, let me put what? The 40 million here. 30, 30, 40. Do you get, or it doesn't matter? You get the whole idea. So no matter what, this guy is never going to lose because the money is dirty money anyway. And he knows no matter if he loses, he can get more than the money he even put in. Do you get it? So even if I must lose 50% to gain 50%, which looks like legit fund from betting, I can put it into some filling station in Ghana. Please don't try this at home, but you get the whole idea. So you see how money moves, converts from one form to the other, then it will come, then filling station, or we open a gym. These are the common businesses that they do. Yes, please.
How did you know all this?
That's why I said to catch a thief, you must be a thief. We learn it as part of our procedures. So my job I do, I'm actually an ethical hacker. Okay. So mostly I protect company systems from some of these phishing. And to be able to do that, you must know how to do them. Right? We even do something we call social engineering. I can pressure you to reveal things that you weren't supposed to reveal. It's called emotional pushing. So we use 7 secrets of psychology to pry into your brain to steal data without you knowing. All right. It's learned. I mean, it's very easy. You can do it to anyone. I can call you as if I'm your managing director. I just need to get his files. And I'll tell you that, come to my office in the next 5 minutes. The file for Mrs. Opoku, I want you to send it to me now. I've sent you my email. And he says, sir, but we are not, hey, how can you speak that? I'll tell Mr. Opare right now. You see, you'll be in fear. You think that truly it's me, but it's not me. You send the information, I capture it. I've already duped Mrs. Opoku. Then I'm gone. We stress test this on a lot of organizations and they fall prey. Humans are easy to manipulate. Very easy. You just need 7 things. People want to be liked. So when I call you and I mention your name first, oh, Jerry, how are you? Say, how did you know my name? Because there's nothing sweeter than your name. So, oh, is this your friend? From where? Then I'll start asking you things that you'll be exposing and I'll be manipulating it and talking to you. People are just paid to do this. We call it social engineering. That is why on your phone, sometimes you see that they said you have won $10,000. You have won an iPhone. Click this link or send it to friends. Have you seen it before? Spin the wheel. You have won an iPhone. Who has seen it before? Who has seen it before?
Yeah, a lot, all the time.
Yes. Most of you, your phones are already hacked. Just that you don't have the kind of money we are looking for. That's why we are not minding you.
Hey.
Of course. If you want, I can prove it to you. Your phones, most of you, your phones are hacked. Somebody is sitting in Pakistan assessing your cameras and stuff, but you don't even know. Because you've clicked a lot of links you weren't supposed to. You've downloaded a lot of games onto your phone you weren't supposed to. You don't read privacy policy. So a lot of people have security issues. They just don't know about it yet. And it's a big issue, right? And these things are all what it amounts to money laundering, right? So anyway, that's just by the way. Somebody was asking what is wire transfer. Oh, transferring money into a bank account is wire transfer, or from a bank account from another state to the other. It's a wire transfer. You doing Momo is wire transfer. Sister New landed. Don't imagine. No? So you get the whole idea. So placement, when it first enters the financial system, layering, you create an audit trail, a trail of transactions, then integration, where you integrate it into the financial system by making it look legitimate. And mostly Ghana here is mostly betting, filling stations, gyms, and now washing bay. I mean, things that are cash based. Do you get it? So that cash, I mean, you can't trail it because it's cash. Do you get it? This is where we hide.
Barbering shops and salons.
Barbering shops and saloons with high turnover in expensive places, yes. Because if the money is too small, we can easily catch you. So they go where they can do massive volume. Do you get it? I know somebody who.
And then nowadays, to this wash and go laundries too is springing up.
Yes. Yes, but the kind of business that people do that brings a lot of money, that they are into money laundering, I can't disclose it to you. It's one obvious business that nobody even. And Bob, your team said this is the business that people do
Is
to
it real
launder
estate?
money. No,
Church.
real estate crap.
Operating churches.
That's one. NGOs, yes, the donor funds that come to the NGOs, trusts, mutual funds, mini importation. This is where now they hide the monies. Even
A lot
agriculture.
of people are registering NGOs.
Yeah, most of them, yes. Most of them. So these are some of the things. So what are the procedures when you encounter money laundering? You must always do know your client procedures. So as part of your background checks, right? GRA does know your client procedures. They really inquire into the taxpayer. They do the director checks, know when they were established, who are their directors, whether they have filed their returns up to date, what kind of cars do they drive. They do inquiry into their tax affairs, right? Then to know who they are. Then they appoint a money laundering reporting officer, who we call an MLRO. For GRA is a money laundering reporting unit. You establish what? Money laundering training. So they train the tax auditors on money laundering. You establish internal procedures, proper quality control. Do you understand? Then you must verify the identity of new and existing clients or taxpayers, maintain records of identification, report suspicions of money laundering to who? Your money laundering reporting unit, right? And also avoid what? Tipping off the client. You remember, these are some of the procedures. If they ask you, you can write something about that. Okay, so that was about money laundering. Any questions so far? Any questions so far? We can move to ethics. Can we move to ethics?
Yes, please.
All right.
Yes, please.
So when it comes to ethics, you let me stop